Hello active traders, we've got a rally in the stock market in the making. My name's Ken Calhoun, president of TradeMastery.com, and you're at the channel that's designed to help you become more successful in your trades. Let's take a look at some thoughtful strategies and trader Q&A from our week ahead broadcast coming right up. Remember, one of the key strategies that I found in better trades is to use break-even stops wherever possible. So yes, we may get in on new high breakouts, but if things stall and start to drop, like a trade I was in recently in SNAP, S-N-A-P, it's always a much smarter idea I've found to go back to cash than re-enter up at new highs if and when it takes out new highs rather than suffer through a drawdown or a stop. So always think about strategies that you can start using to use break-even exits for whether you're day trading for quick breakouts and then comes back down to an entry, or swing trades that run up and come back down to an entry. It's much smarter to trade strong charts that are less likely to pull back in the first place and combine that with a very careful, intelligent, much tighter risk management approach with break-even stops as a core part of your trading approach. Best wishes for success in your active trades. So everybody, welcome to our Trading Week Ahead broadcast for today, Saturday, June 3rd, 2017. As always, all information is for educational use only. I'm not making any advice about what to buy, sell, or hold. By watching this, you agree not to make actual trades. It's all for information and educational use only. I encourage people to use a demo or paper trading account where you get the hang of things and not to risk live capital. My quote of the week comes from Abraham Lincoln. Last week, you may recall, I correctly said long if the market got over 24.23, which it did on Thursday right there. So congratulations if you listened to my call. Boom, we're in the money. Bye, bye, bye. We're up at new highs. Booyah. Well, that's great, but is the party over? Is it just starting? Are we continuing on up to new highs? Well, I said long 24.23. That was our R1 trigger last week. For the upcoming week ahead, my triggers are as follows: 24.47. I'm using 24.47. Again, not a trading recommendation, but what I'm looking for is I'll be going long in more size in addition to what I'm already long in if and only if the stock market at the S&P breaks 24.47 as R1. Okay, nailed the call back on Thursday. Market ran on up for us finally. A nice big green candle. I like the price action. Let's see if there's more to come, right? 24.08 is the S1 trigger. I'm not going to be trading oil and gold next week unless we break resistance, because so far gold is kind of down and mediocre. It's not doing anything, and crude oil is also on the down tick, right? There's USO, UCO, oil holders, British Petroleum. All things oil and gold are a terrible idea to trade next week because they're not going anywhere. They're down and choppy. So just say no. Stop the madness. First up to back gang is Clovis Oncology. We got a triple top breakout over 56 and a false breakout here to the 50. Pulled back. Finally skyrocketed on up to new highs just yesterday. If we take a look at the 2-day chart, you can see. Next pick, CN. C-I-E-N. Okay, it's in Charlie Indigo Echo November. You can see a breakout here. It gapped from 24 all the way to 26 yesterday. That's the breakout. That's the last 2 days of price action. The gap up occurred Thursday morning, and CN is taking out new highs, so it may be worth a shot up over the whole number resistance. And the last but not least is Micron, MU. You can see this guy's been in a steady uptrend continuation all the last few weeks, just like the stock market. These are my picks and how they worked out. Again, paper trading only, right? We only do demo trading. But those were my picks in the live room on Thursday. That was Thursday the 1st, I believe. So if you look at how some of these moved, for example, charts like Teva, that was a good rock star breakout for us. Pre-market, I'd call Teva long at 28.10. How much money could one have potentially made had you actually made that call, right? Those are the kind of charts that professional traders trade. Professionals don't trade penny stocks or $3 stocks or $5 stocks. Despite what this crop of moron young kids is out there trying to mislead the trading industry into believing, stop that madness. These are the right kind of charts, right, for a professional day trader. I've been trading these since the 90s, this type of chart, right, 20 to 50 bucks a share. Pre-market, again, this is a bullish cut breakout. I said we'd go long at 28.10, and often I will, like in this case, I give a second chance long trigger 28.20. So even if you missed the first breakout, you would have a second chance here, and I got them out early. We didn't get the exact whole number high. I had to close out the paper trade a bit early, but you can see with lightning-like precision, 29 was the whole number resistance. And that's a good example of a good professional day trading strategy that I've taught since the 90s, is buying right above a whole number, then selling right under the whole number, right? So I got my traders in at 28, 10, and 20, and out in the high 28s before the pullback, right? You could have still held on to it and ended up drifting, but the open range breakout right above the whole number worked out especially well. Does everybody understand that foundation for trading? You don't want to trade $3 stocks because they only run like 20 or 30 cents, meaning you'd have to trade thousands of shares with a ton of risk on the front end just to play with that stock, and you'll get stopped out more often than not. So that's a disaster. That's a terrible idea. Just say no to cheap stocks. That's what the refuge of the incompetent. Professional traders trade instruments like this. But now let's open it up for Q&A. Roger's asking, how can I stop taking big stop losses in my trades? I always answer that question by saying go wide, not deep. So, and I learned this the hard way. Instead of 500 or 1,000 shares of something, I may go in 20, 40, 50, 100 shares, but I'll trade 8 or 10 or 12 different instruments. So I'm throwing a lot of darts at the market, and then I will scale in. You know, I don't plan to make any money with a 50 or 100 share trade, right? That's not worthwhile. What's worthwhile is the ones that continue to run, like we've had so many do lately. So scaling in every 2 points or so in a swing trade for swing every couple of days, every 2 points if it keeps going up for swing trade. For day trades, I'll only scale once, and usually that'll be 20 to 30 cents above the initial entry, because at best case they may run 60 or 80 cents. They're not going to keep running, with rare exception, for a point or two. So I like to get off a couple of trades or a dual set like that TIVA. I had them a dime apart for trade 1, trade 2, and then we get out right under the whole number. And that's a sensible, thoughtful, intelligent, advanced strategy for the world's trader. Anyway, I have got to run. Remember, keep an eye on your sector charts, especially important next week to help you drill down or target into the very strongest sectors that are currently in motion, right? You could see the biotech sector, just a reminder, is the strongest sector chart I can see out there, at least looking through my own scanning. And again, what you do is you put together any good professional approach, you put together a portfolio box that just has major sectors that you like to trade, whatever those sectors are. And then look at the top green and top red sectors to see what's moving up and down. So the VIX is way off 3% yesterday. The NASDAQ Biotech was up over a point yesterday. It ran up even further than that on Thursday. So we've got emerging strength in biotechs. We have nothing of note going on in oil and gold. And we have a rally stock market to work with. So anyways, I hope that helps solve some of the puzzle for you guys, and I hope to see you all in my upcoming events. I've got to run. I've got swing scans coming up with even better charts for my traders. If you're not yet a member of Swing Scans, be sure to join that. And if you're a day trader, try out my live trading room. I've got a free live Monday coming up this Monday, and just like 45 minutes or an hour or so. So if you have additional questions, bring them there. And if I didn't have a time to answer all your questions, because I know there's some I haven't had a chance to get to, and I apologize for that. With so many of you here, I can only answer the first handful of questions I get. Ask again next week or the week after, and we'll get to it eventually. So thanks so much for being here, folks. I really appreciate your taking a bit of time out of your Saturdays. #1 in the entire trading industry for Saturday or any webinars that I've seen. I don't know anyone that gets 4,400 registered for their events. So thanks so much for being here. You folks have been great. Until next time, trade with passion, trade with little tiny stops, and try and make as much money as you can in today's rally markets. Take care, and best wishes for success in your trades. Hi traders, I'm at the Chill Restaurant in Colorado Springs. Trading works up an appetite, so time to dig in. And that'll do it for another episode. I hope it helps you in your trading. With the stock market at all-time new highs and a rally in the making, there's never been a better time to trade. If you like what you've learned here so far, feel free to subscribe to this channel, post a like, and post comments and questions in the areas below, and I'll be happy to answer those for you.